Hey guys, welcome back to episode 25 of US Stock Market Technical Analysis. In this video, I'll be sharing with you my technical analysis of the US stock market for the month of October. So recently in the past couple of trading sessions, the US stock market has been a bit more volatile. Right, so in this video, I'll be sharing you some of my thoughts and technical analysis of the US stock market and my plan and strategy moving forward. So make sure you stick around in this video for all of that. Alright, so for the US stock market, I'll be taking a look at the three main indexes, which is the S&P 500, the Dow Jones and the Nasdaq. So I'll begin with the S&P 500 first. So on the screen over here, we have the chart for the S&P 500, the SPY. So as you can see, we had some volatility over here recently. So the S&P 500 made its high on this day, which was on the 2nd of September. And since then, not only did it not manage to reach back its old highs, it has been declining over here. If you watch one of my video over here, which I did about a week or two ago, when I filmed that video, we were around at this point in the price chart. And at that time, I already shared some of my concerns about the US stock market. So in that video, I mentioned that even though at that time, prices declined only about 2% from its high to where we are at that time of the filming of the video, and we weren't in a proper stock market correction or stock market crash, I did raise a few concerns about the overall strength of the US stock market. And after I filmed that video, not only did prices of the S&P 500 decline, it actually declined below the 50-day moving average. And that is certainly a violation that we should pay attention to. So why should we pay attention to the violation of the 50-day moving average by the S&P 500? Because if we zoom out over here, you'll see for the longest time, if we go back all the way to February of 2021 this year, you'll see that every time the S&P 500 declines, it declines back to the 50-day moving average, and the 50-day moving average has been serving as a good point of support. So prices of the S&P 500 decline over here, then the 50-day moving average provided support over here, and then prices found support and it bounced back up. So prices decline again to the 50-day moving average, and again, 50-day moving average served as a support. And we can see that this has been repeated many times, right? So this was another time over here, 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 and then finally, at this point over here, prices finally declined below the 50-day moving average, and that is why this is a violation to pay attention to. When prices break below a strong and well-established support area, this can indicate to us weakness in the stock market and a potential change of trend. Furthermore, if you take a look at this candle and this candle over here, when prices break below the 50-day moving average from this candle to this candle, it not only declined below the 50-day moving average, it did so on very high volume. So if the break below the 50-day moving average did not give you a strong warning, the fact that it broke below the 50-day moving average on high volume should have made you sit up on your chair and give you a strong warning that there is weakness in the stock market. And you'll see that after the break below the 50-day moving average, prices tried to rally back over here. And prices did rally back a few trading sessions, but as prices reach back to the 50-day moving average, you'll see that the 50-day moving average has now turned into a resistance. So you can see the resistance over here as prices hit the 50-day moving average. The 50-day moving average became a resistance and pushed prices back down. And over here, we had the second gap down after the first gap down over here. And these two gap downs happened in a space of just a few trading sessions. And you'll see that for the second gap down also see prices gapping down on above average volume. So all of these violations in the S&P 500 should give you a warning sign that the S&P 500 might not be as strong as previously. In fact, right now we are seeing weakness in the S&P 500. And right now, the S&P 500 is finding support at this area over here, which is the price level of around $427 to $425. And you can see that this area has been a previous support over here and over here. So moving forward, we want to at least see the S&P 500 holding above this price area of $427 to $425. If not, if prices continue to fall and fall below this support area, then we will have even more violations in the S&P 500. So that's the first support that I'm taking a look at for the S&P 500. If prices of the S&P 500 manage to rally, then the first area of resistance that we'll be taking a look at is over here. So between the price level of around $438 to $435. So if prices manage to break above this resistance, then that is one positive sign. But the thing that I'm really paying attention to is the 50-day moving average. I want to see prices breaking above this area of resistance first, and then breaking above the 50-day moving average and staying above the 50-day moving average. If the S&P 500 can do that in the coming trading sessions and the coming month, then this decline over here might just be a minor blip. But as of the filming of this video, based on the violations that I'm seeing in the S&P 500, I'm wary about the strength of the S&P 500 right now. So that's my technical analysis for the S&P 500. The next one that we'll be taking a look at is the Dow Jones. So let's move on to the Dow Jones chart. Alright, so now we are on Dow Jones price chart. And as you can see on the price chart over here, the Dow Jones has been basically trading sideways for a period of time over here. So it started in May 2021 all the way to right now, so in October. The Dow Jones has been basically trading sideways for about 6 months now. Yes, even though prices managed to break out over here, this breakout was a false one. So as you can see over here, even though prices managed to break out over here, prices did not manage to rally much before it starts to stall, and after that it declines back into the range over here. And if we zoom in over here, you'll see that the Dow Jones has now found resistance in the form of the 50-day moving average. So after prices break below the 50-day moving average and it found support over here, this price area has been serving as a strong form of support for the Dow Jones, right? So this is not the first time. The Dow Jones has managed to find support at this area previously, right? So if we take a look at the left side of the chart, this was the first time, this was the second time, this was the third time. So this price area has been serving as a strong form of support for the Dow Jones, right? So this is a support, but as prices rebound from the support, it found resistance in the form of the 50-day moving average. So as you can see, as prices rally back up over here, prices encountered resistance and it could not break above the 50-day moving average, and instead it declines back to the support over here. So moving forward for the Dow Jones, for this price area of around $345 to this price level of around $350, this area will be a price area where prices are likely to encounter resistance. So if I'm looking for strength in the Dow Jones, I want to see the Dow Jones breaking above this price area and breaking above this resistance and managing to hold above this resistance. That's a quick analysis of the Dow Jones. Now let's take a look at the Nasdaq. So this is the price chart for the Nasdaq. Similar to the other two indexes, we see that prices for the Nasdaq has also broken below the 50-day moving average over here. And after prices broke below the 50-day moving average, the Nasdaq actually managed to rally above the 50-day moving average over here. But we can see that this rally was short-lived, as after that prices declined again back below the 50-day moving average. And similar to the S&P 500, the volume that the Nasdaq is showing is worrying. So if we take a look over here, for this gap down over here, prices gap down on above average volume. And you can see that on the subsequent rally, prices rally on relatively lower volume over here. And you can see that again, the moment prices decline on above average volume. So we see that for the Nasdaq, volume on down days is higher than volume on up days. And that is definitely a sign of weakness in the Nasdaq. Because in a strong uptrend, we want to see the opposite happening, right? So volume on up days be above volume on down days. But what we are seeing right now is high volume on down days and low volume on up days. So right now, the Nasdaq is finding support at this price level of around $356 to around $353. And we can see that this price area has supported prices of the Nasdaq previously, right? So we take a look at the left side. The Nasdaq has managed to find support here and over here, right? So this area is a support that I'll be taking a look at for the Nasdaq. And similar to the Dow Jones, if I want to see strength in the Nasdaq, I want to see the Nasdaq moving above the 50-day moving average over here and staying above the 50-day moving average. So far we have taken a look at the three main indexes in the US stock market, the S&P 500, the Dow Jones and the Nasdaq. And we can see that for all three indexes, there have been violations after violations. So right now, the overall US stock market is definitely showing signs of weakness. And as a result, for my own personal portfolio, I'm reducing my exposure in the markets. Because when the market is weak and is not doing so well, you want to dial back your exposure in the market. This way, if the market continues to correct further, because of the reduced exposure, your portfolio will encounter lower amount of risk. And then once the market starts to show strength again, you can slowly dial back up your exposure in the markets. Yeah, sure, if you follow this method and strategy, you might miss out on a couple of points and profits along the way. However, this method and strategies allow you to limit your risk in the stock market. And I think that's the most important thing when it comes to investing and trading in the stock market. Furthermore, the point of investing and trading in the stock market is not to pick the exact bottoms and exact tops, because no one can do that. As long as we keep our risks and losses small and our rewards and returns high, we are able to be profitable in the stock market even if we do not pick the exact tops and exact bottoms. So that's my technical analysis of the US stock market for the month of October. Hopefully you have enjoyed and learned something from this video. If you did, smash that like button because it will really help the channel grow and allow me to produce more content such as this. And if you are new to this channel and haven't already subscribed, make sure to subscribe to this channel because each week I release new videos about investing, trading, and the stock market. I'll see you in those other videos to your financial success.